The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, we're back, and back from Monday, that's for sure. What I'd like to do today is to talk a little bit about the stock market, because I think something significant happened yesterday. I'll be happy to share that with you. But the first charts that I've posted into Tiger TV were the silver charts. The first one was the half-hour silver chart. And as you can see, we had a 78% pullback from the previous day's low. And since that time, the market has picked up a lot of steam and is beginning to look like it wants to go higher. This gold and silver just does not back off very much, folks. It backed off about $18 overnight. We got down to $13.05 on a fast tick. I mean, it hit $13.05. And the next trade was at $13.12, and I verified those trades. So there was somebody with a lot of bucks wanting to buy gold at $13.05 yesterday, late yesterday evening. So that should be pretty good support. Once we get above the $13.30 level, I think we're going to start to see an acceleration in both the gold and the silver, but we'll have to wait and see. What I want to talk to you about now are the stock index futures. Now, if you'll notice, the chart that I posted in there was for silver. It's a weekly silver chart, and I've notated it by showing you what was happening when silver was making, $49.50 an ounce, that the open interest was dropping, rapidly. There were no new players coming into the market. And so this is what I want to do now, is I want to walk you through what's happening to stock indices. This information comes from the Chicago Mercantile Exchange. I check it every day. You can check it yourself. Just go to CME.com, go under Market Data, pick out what you want to look at, and then just hit Volume, and then all the information will be there telling you the number of contracts outstanding. And remember, for every buyer, there's got to be a seller. So that's what we're looking at. So the first one I'm going to put is the open interest on the day of expiration, options expiration that we had just recently. I believe it was on Friday. If you'll notice in there, the equities, that includes all the NASDAQ, the Russell, the S&P, and the Dow. Frankly, most of it is the S&P 500 during that time. But you'll notice that the volume that day was 2 million contracts. The open interest was 679,000, and that was down 1.7 from the previous day. So the high going into options week was 9 million is what we had for open interest at that time. Now you would assume, with open interest dropping here on options expiration day, that there would be a corresponding increase in the next day or so, especially the next day or so, if in fact the market was going to, to hold that level. However, I'm going to put the next one in, and you'll notice that yesterday we had a situation where we're only at 7 million now. In other words, those folks, those 1.7 million people that left the market, contracts, have not come back in. So that tells us that that's short covering, because short coverings have to buy back their positions, and in an up market, that's usually what they're doing. So this is the first indication in a long time that we are looking at something that is very, very interesting as far as what is happening with the open interest. Now, we followed this with gold and silver. We warned you about this back when silver was $49.50 an ounce, that this was not a bullish sign. In other words, to keep markets going, you've got to have new players coming in, because eventually when all the shorts cover, there's a vacuum under the market, and that's what happens. So keep your eyes open right now. We've got a situation where the market is actually giving us a peek at the whole card. That's really what it's doing. So keep in mind that that's what we're watching. Now there were a few technical things that happened yesterday that I thought we should bring to your attention. If you'll give me a second here, I will try to bring it up. I know I've saved it. Here it is. Give me 1 second here. And this chart goes back over the past month, and this is the New York Stock Exchange Index chart from yesterday and also for the past month. And if you'll notice that 1.618 level, we made a high back on the 19th of June, and then 8 days later, coming into the 24th, we made a slightly higher high that stopped exactly to the exact penny of the 1.618 expansion number from June the 9th down to June the 12th, and then that expansion number on the way up stopped exactly where it was. Whether that is of great deal of significance or not yet, we don't know, but the fact that the market actually rolled over from that point gives me some type of a feeling that maybe, or a sense of foreboding that maybe that this could be, the top, in this particular market that we're looking at. The other market that looked very, very interesting during that time was the VIX index yesterday. As you know, we've been watching this 5-wave reverse point wave form here over the last 5 or 6 days. And even with the market screaming ahead yesterday, the VIX index could barely make a correction. All it did was take out the previous day's low and then had a pretty good move to the upside. But, nothing has really changed. The market stopped exactly where it was supposed to stop yesterday. The Dow Jones stopped at the 618. The NASDAQ stopped at the 618 or the last significant low back on I believe June 14th. And so all of that tells us that we are still holding, a bullish stance here in the market. But if we go below the lows we made yesterday, that would tell us that, this thing is going to be just a little bit more sinister than, what we've been looking at recently, because the market has been up so many days in a row. We've broken almost every record that's out there. So we'll have to, just keep our eyes on it to see that these records are broken every day or not. Now, one of the markets that we watch closely is the biotech index, because it has been, one of the biggest ones. And yesterday's high was an exact 786 to the exact penny. It's the index is actually holding its own today. It's still about unchanged, I guess. But yesterday's high in the biotech index occurred just as the market was making that move in the New York Stock Exchange Index, and that's another thing that I think is relatively important. In fact, that we hit that 786. Now, if it goes above the 786, up above the 259 level in IBB, then I would assume all these things are going to go a lot higher. And we'll have to wait and see. We're just starting to see little signs, folks. That's basically all it is right now, are little signs. Some of them seem like they have a neon sign characteristics to it, but we'll have to let history decide. Now, I want to show you the New York, the Dow E-mini, because I think that is very important. The old high in the Dow E-mini that we made several days ago. Oh, they've got this data wrong. Wow. Oh, no, it's correct. It's correct. Let me put it on an hourly chart so we can see it a little clear. That's what I wanted to see. Here we go. I want to bring this chart up so you can see it without any trouble. But this was really amazing to me. Remember yesterday, folks, we had the NASDAQ going absolutely crazy to the upside. And as it was doing that, the S&P 500, all it could do was to come and take out the previous day's high from the 22nd, which was Sunday. It took out Sunday's high by one tick. That's $12.50. That is usually not a sign of a whole lot of bullishness. And when you stop and look at what the Dow Jones was, well, what the S&P was doing at that time, what the NASDAQ was doing at that time, it was really amazing that the market had no more power than to run up to that level. However, it did stop right where it was supposed to stop. We had a very, a pretty good correction yesterday, reversal type day, but that didn't follow through. We made the 61% retracement of the day 3 days ago, and we went a little bit below the 50%. So nothing's really happened yet in the Dow Jones, in the S&P or the NASDAQ or any of these things, because they have to follow through to the downside to see if that's going to be the case. Now, if we take a look again, I'm looking at divergences, folks. That's really what I'm looking at, because this open interest means a great deal. It really does. This tells you the number of players that are coming into the market, and if they're not coming into the market, you're going to have vacuums in here, and that in fact is something that's going to cause some problems, down the road. Okay, now let me get the Dow Jones E-mini up here. Only take me 1 second to put the chart up, and you'll be able to see that yesterday's high was a perfect 786 retracement of the previous day's high. In other words, from Sunday night, we came down, we rallied up to the 786 retracement at 16,880, and then we broke all the way down. We actually dropped 200 points. We're seeing good volatility, folks. That's another thing that really starts to really light the candles, because volatility seems to be coming back, and that's what we really need. We've had so many days in a row where we haven't had a 1% move in the stock market that it's just, I think it's broken every record with the exception of 94, 95, and that is a very unusual situation in itself. Now, so far from last week's low around the 15th of June, we came down and we touched the 786 at 1695, and so far all we've been able to do is rally up to the 50% retracement of that move yesterday, and it could very easily turn and go higher. The NASDAQ is the leader of the band. It's still the one that has the most power and everything, but it is had a tremendous move yesterday. We blew out all the highs. Went past the 1.27 expansion, and that's the one that has been, really running the market. But boy, believe me, the NASDAQ is the stock market on steroids, folks. When that thing moves, you better get out of the way if you're on the wrong side of it, because it can really spank you, really badly. Okay, we got the Dow up about 27, and silver and gold up a little bit. And we'll be back right after this message.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I posted a chart from it's done by my partner Bart, and it's a New York Stock Exchange index. And you'll see that it goes back to 1974. That was known as the October crash. I happened to be involved in that one. Similar situations like we have going on right now, but I was too naive and too headstrong and cocky to even listen to anybody else, because I thought I'd found the Holy Grail, and I didn't have to worry about things like money management and risk control and stuff like that. But the reason why I'm showing you this chart is because the accuracy of these numbers that we deal with, these Fibonacci numbers, is paramount to the studies that we do. From the low that we made in 1980 to the low that we made in 1987 during the crash, that was exactly 61% of that particular range. From the low that we made in 2009 on March 9th, that low was exactly 61% retracement. I mean, folks, I'm talking about within 5 points in the Dow. The Dow was around 6446, I believe. The S&P was at 666. The devil's number, that also spot on to a perfect 61% retracement. And now what we're doing is we're making these mirror images of these patterns, these expansion patterns, this butterfly pattern and this 5-point reverse wave. We're making it the same way. And if, in fact, that New York Stock Exchange index hit that number right on the money yesterday, we have to pay attention to that. Now, if you'll remember, on March the 5th, the stock market made its bottom in 2009, but it retested it. It didn't quite make a newer bottom, I believe, on the 8th or 9th, and then that's when the market really turned. So sometime here in the next few days, we have to watch it, very, very closely because of the open interest and the fact that these numbers have been hit. These patterns have been completing for quite some time, and so it's worthy of our information base, because if it does turn, we should know what to do, and if it does that, then we have a pretty good idea that we're going to have a tremendous correction here, if not the top, the mother of all tops, as a matter of fact. And at my age, this might be the last type of top I see like this. So we'll have to let history decide if that's going to be the case or not. So we want to watch this very closely over the next few days. Now, if these markets go up and take out the highs that we made yesterday, 1960 in the S&P, and it's not very far away, only 14 points. It could do that in a matter of a few hours. And also at 3,830 in the NASDAQ, then that would tell us that this is all malarkey. It's not working, and just continue buying because it will go up forever. That would be my guess. We've had a request to take a look at the stock of Apple, and if you'll give me 1 second here, we'll put it up here. We've had a pretty good move. Let's do it on a little bit longer term basis because we can see it quite clearly here. Oh dear, we've got a split in the stock of Apple, and that is going to cause me a problem because we've split 7-1. Apple. Let me do the daily because I can't. I don't do stocks, so stocks are like watching butter melt. We had the 786 occurred in Apple up here at this 95 area. That was equivalent to 650, I believe. The old high was at 703, so we were about at the 786 retracement of that move, and we've been down now for 10 days in Apple, and we're completing a little ABCD down here. It's a weaker than market stock right now, but nothing is really happening. If you wanted to buy the stock, you could buy it here and not risk more than $2 if that's what you'd like to do. But it has been down for 10 days. The rest of the market, of course, made new highs yesterday, so there is a little bit of weakness in Apple compared to the rest of the market. But that's all I see in Apple. I don't see anything really significant to it. When this market was at 385, you couldn't get anybody to buy it, and that's where the real the buying was. That's where your big ABCD was, and your 786 retracement off the low of 2004. All that stuff told us that this is where you wanted to be, looking to be a buyer of Apple. But right now we've just been down 10 days. It's done very little, and but it's less than the stocks. Okay, we take a little bit of a break here. 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I've been asked to put a chart of December corn into the Tiger TV. And as you can see, we're down near this double bottom that we've been talking about for weeks now. We came within about 3 cents of the exact low. The market's still down today. It's within a nickel of that low, 5 cents, $250. So tomorrow on the commodity show, we'll probably be looking at maybe new lows coming down here in corn. And we want to find if this is, in fact, going to be a major double bottom or if it's just going to take the stops out that we made last January and then reverse itself. But it's still a little too early to tell that because it's been going down, so much. It looks like we're going to hit at least the $4.30 per bushel level in corn just from looking at the charts. But we'll cover that on the commodity show tomorrow. What I wanted to do now is I wanted to talk about the Treasury bonds because we're starting to see a really nice counter-trend rally here that should take us up to about the 137.15 level in Treasury bonds. We made the big ABCD pattern there in early June, around June 2nd, and then we came down hard into the end of middle of June, and then we've had this little bit of a bounce here, and that could take us all the way up to the 137.16 level because that it would be the place where you would have a Sell Gartley pattern validating the longer-term sell Gartley pattern that we had at the 138.16 level. Actually came in at 139 is where the actual price was. But this is what we're watching here because it's just a little counter trend rally. It's taking almost, let me see, it's taken about 14 days to complete, which is roughly 14 trading days, roughly 3 weeks. So we should be looking sometime either Friday or Monday looking to sell the Treasury bonds up in this area of the 137.08 level. That's what it looks like from a technical standpoint. Now, the bond market is very large, but it's not as big as the note market. The note market, which are the 2-year to 10-year variety of paper from the Treasury, i.e., courtesy the Federal Reserve Board. And you'll see we're doing the same thing here with the. If you give me a second here, I can get this lined up so we can see it a little bit better. Yeah, there's what you get. You'll see that the Treasury notes are doing the same thing, and they need to get about 3/4 of a point higher, get the rates down to about 2.4, and that would tell us that we would be looking to put a sale on in the Treasury notes at that point. The notes trade very well. The problem is they trade like molasses. I mean, their bids and offers in there are so big that it's totally unbelievable. If you remember when I put the open interest and volume things into the Tiger TV this morning, that I showed you the open interest and how it was changing. But if you looked at the volume and the number of contracts that were out there, you'll notice that the interest rate futures are 7 times the volume and open interest that we have with the equities. So it's a big market with big money because this is where real money goes. This is they believe in the old adage from Bernard Baruch, don't be concerned on the return on your money, be concerned on the return of your money. And that's why treasuries, are rated so high, and they have always, at least in the past, paid their dividends and returned the principal when you brought the bonds back for redemption. So as long as that continues to happen, we should have no problems. But the way the government's going these days, you could toss a coin in the air to see if it's in fact, going to see if that's going to be the case or not. So bonds and notes look like we're having a little bit more of a rally. I do believe that this is a rally where we will get a pretty good chance to go short. And that's, what we're watching for that particular move. I've already put the VIX index up and showed you that it's made some type of a bottom using that reverse point wave that we look at. And so I think it's important, as long as it doesn't take out that area of around 10, we should be able to, hold up and see if it's going to be a pretty good move to the upside. Now, when the rest of the market yesterday was having the big reversal, the transportations, which has been the strongest of all the Dow components, because it expanded way beyond the highs of 2007. All it could do was to make a 61% retracement yesterday, slightly lower low today, and so it's holding its own quite well at this level. So all of these things have held up. A good support, but if we take out the lows of June the 10th, 11th, then that will tell us that these markets are most probably getting ready to have a major turn. All I can say is that we're starting to see signs that the foundation of this bull market might have a few problems, and those problems lie in the fact that there were not new highs made in the cash index. The futures were only able to make it by one tick, $12.50. The Dow Jones could only make a 786 retracement. It was the NASDAQ that was taking the market up quite a bit. And as you can see by that chart that we posted on IBB, the biotech making the 786 exactly yesterday, that also was pulling the NASDAQ higher. That's why these next 2 days, a la Basil Chapman, are very, very important, because the market needs to keep this momentum going. We're losing players, folks. We've lost from 9 million to 6.5 million. We've lost 2.5 million players in the equity markets in the futures, and that shouldn't have happened, because with options expiration, there's going to be some reduction, of course, because people are liquidating their contracts on expiration. But why aren't they reinstituting them into the next month, which would have been September? That did not happen this time. That's a big red flag. Remember, that's what happened to gold and silver back in a year and a half ago, when gold was $1,932 an ounce and silver was $49.95. We were screaming about that. There's some really smart people in the Tiger Den there, Mr. Z for one, and Marshall, and there's a whole bunch of them. Gringo, there's a lot of guys in there that really know what the heck they're doing. I'm sorry if I miss a few names, but I watch what they're posting, and I watch the charts that they're doing and the trades that they're putting on. And these folks, if you need help and you don't like to trade alone, take a look at the Tiger TV and the Tiger Den. It's a great place for information. They post good information. Tom O'Brien does not put up with any baloney. It has to be straight on, balls on perfect, or it's out of there. And he doesn't, there's no arguing going on in there. There's no animosities. It's basically market information, trading information to try to, put the market in perspective. So that's something you might want to take a look at. I've looked at a few of these over the years, and frankly, I think it's one of the better ones I've ever seen. But, I haven't seen everything, but I've seen a lot. So we'll wait and see. All I know is we have to take, Saratoga Bob is good, and so is Danny. All those guys. I mean, I watch what they post, and they must be good, because they criticize me all the time, and I've been wrong. So you got to give them credit for that. We're watching this open interest every day now on the shows, Monday, Wednesday, and Thursday. I'm going to be checking these open interest in also gold and silver, and also in the markets for the equities, because with this drop in open interest, this could be the thing that makes the cement of the foundation of the bull market just a tiny bit shaky. It not necessarily might do that, but we have to wait and see. And because we have experience in the past when this has happened, it's a big thing. So we got to watch it again. Not many people watch this. I know that because I get emails saying, "What are you talking about?" And I have to tell them to go to the CME website, click on market data, and go to under volume and pick out the group that you want to look at, whether it's agriculture or metals or stock indices. I would not suggest you pay any attention to the foreign exchange, because the foreign exchange is traded at the Merc, but that's like less than 0.1% of the foreign exchange that's traded through the the banking system, the Forex bank. So it's good for trading, but it's just not good for volume, because it's basically insignificant compared to the rest of what's really happening. That could have changed many years ago, back in '82 when we had the S&P come out. We had Forex was going gangbusters over there in the Forex pit, but the S&P took off because it started in April of '82. The big bull market started on August 9th of 1982, when the S&P was trading at 103 as opposed to 1950-something and change right now. So you can imagine what really happened to the markets. They just, went absolutely crazy to the upside. So we'll see if that's going to make any difference or not, down the road. I had one other question about a chart that we've been watching, and that is the chart of IBM. This IBM had a beautiful Gartley pattern forming just recently, and I believe it went below that level. And if in fact it has, that tells us that IBM wants to go lower. It held there for 7 days at the 82 level. And then what happened to IBM? This is really something to take a look at, folks, because this shows wonderful Fibonacci numbers. The IBM made a Fibonacci retracement at the 199 level. Then it came down and stopped at the 182.50. That's where the 618 was. There was a nice Gartley there. The market rallied up 5 points, roughly 3%, and then proceeded to go lower, and then we're still going lower. And it looks to me like we are heading down to the 178 level, which is the 786 retracement. in fact, let me draw this in just to show you how clear it is. It looks very very interesting from a shorter time frame. You'll have a nice little 3-drive pattern forming. So about another $3 or $4 in IBM, it would be another place to look at it from the long side. But this is a weaker than market stock. This thing's topped in February. When the rest of the market was bottoming on February 4th, the chart of IBM was making a top. It was doing the exact opposite of what the stock market was doing. So you remember, folks, it's a market of stocks, not a stock market. So keep that in mind, that each one of these little puppies is a little different, and you got to look at it for its own, I can't think of the word, but its own factors that it really needs to do. Remember, when Apple went from 703 down to 385, the stock market was roaring to the upside, and Apple was going down all the time. At the top at 703, there were 34 bullish analysts at Apple, no bearish analysts. At the bottom, there were 4 bullish analysts and 28 bearish analysts when it was making its bottom at 385. So remember, you're the one that has to make the decisions on whether you want to buy or sell. It's not the person from Amherst or Yale or Harvard, whatever it is. I always liked a quote by my friend Art Cashin on the New York Stock Exchange. He was on one day, and we were on a panel, and they asked him a question about the youth of some of the people that were coming in from the the universities and stuff, giving really information to these hedge funds and mutual funds, and had powerful jobs as director with maybe 1 or 2 years of experience in the market. And Art said, he said, I have a hard time listening to anybody that is not old enough to shave. And he said that includes the girls too. And everybody on the show just absolutely cracked up. But he's a great individual, and he's very smart, and he certainly knows the the markets and how they operate. But we haven't been here before. This is not the beginning of a new bull market. I don't think there's any question in my mind, and I look at this stuff all the time. This is how markets end. They end with a big flurry like this, like we had in the NASDAQ yesterday. Please let me in. But they're not letting people in because there's no new buying coming in, at least on the stock indices. I don't know how they do it with stocks, but it's a contract at the exchange. But when you buy shares, you have to have someone that sells shares. And if you'll notice, the volume on these things is dropping. I mean, something is wrong here, folks. I don't know what it is. But this is not the characteristics that you'd like to see in a roaring bull market. But whether that's going to change or not, I'm not really sure. Now, I've had another request to take a look at the gold-silver index, because we were quite bullish on that just recently, and we've had a very strong move out of this level here. We'll look at it 2 different ways. We'll look at it with the daily, and we'll also look at it on the weekly here, and we will see where we are. Okay, we'll take a little break, and then we'll take a look at the gold and silver index.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and we're going to be talking about the gold-silver index. I posted the daily in there that shows how we came off of that 786 retracement with that 3-drive pattern. That's the same type of pattern that we talked about with IBM, folks. If the IBM gets down to $77 a share, you want to be able to take a look at that, because that's a very low-risk trade at that particular point. And remember, these are all probabilities. They're never, there's never 100%, of course, and I think it's important that everybody really believes that. Now, the second chart that I posted in here on the gold and silver is the long-term weekly. If you'll notice, the 1, 2, 3, 4, 5 expanding triangle that completed from 2007 with the low at 2009 and the high at 2011. That's the same pattern that we're seeing here in the stock indices, the transportation index, in the long-term charts. Those are the same. They might not work this time, but these are big, and it takes time for them to complete. So we'll see if that is going to occur. What's interesting about this long-term chart here that we're watching here with the gold and silver index here is the fact that we have this 25-week cycle that is there. And that cycle is rather important because it came in right where it was supposed to at the 786, and we've had a really strong 20% move off of that bottom. And that's just the beginning, I believe, because of the wide bars that we've had on this weekly basis. Now, it's overbought, of course, but it could very easily come down and retest a 382 retracement, or something of that nature, and it'll give you a place to buy it. We'll be watching that on the commodity show over the next few days, especially for tomorrow. But tomorrow we really need to focus on the grains because we're having new lows being made in wheat, very, very close in corn, and we have surpluses of all these things. There's no inflation in that complex of the market, but we know that can change quickly. So we'll be watching for a potential entry here if corn tests this double bottom and doesn't go down anymore. The reason for that is the market is so oversold that you usually will get a $1,000 or $2,000 move with a risk of only about $250, and so that's why I believe it's important to to really watch that from a technical point of view. But that's what we'll cover tomorrow when we get into these things. Remember, folks, as long as we don't take out the highs of yesterday, I really think there is a probability. It's still 50-50. Well, it's more like 60-40, 40% on my side. But if we do yesterday, those were those 618 retracements. They stopped spot on, just like they have since February 4th. But if we break that with this drop in open interest and with this 1.618 expansion that we've seen in the New York Stock Exchange Index, and the non-confirmation in the Dow Jones, and the non-confirmation in the S&P cash, because that didn't make it a higher high either, that's telling us that there's something not right in River City. So you have to remember that. Remember, folks, always do the thing that you fear the most, because making a decision, change